Bitcoin is still relatively small. Now it's growing by leaps and bounds.
Bitcoin is something that I think really aligns with what many people perceive the libertarian viewpoint of free markets and transparency and building solutions rather than just going through that political process. How do you view kind of Bitcoin's rise, given the backdrop of this kind of undisciplined central bank and kind of a very heavy-handed intervention into the financial market?
Well, a two-word answer would be the solution. I just think this is revolutionary. I'm so excited about it, mainly because of the fears that I have. One of the great, themes that was important to me when I served in Congress was the democratization of credit and investments. So, number one, we lived through and we saw what happened with the highest inflation we had seen in a generation most recently, tied to prolific spending, whether it was required at the moment or not. We saw the results. As a student of history, we've seen it in other societies. Now, I don't believe the U.S. is ever going to be the Weimar Republic of Germany. I don't think we're ever going to be Argentina, much less Zimbabwe. In thinking that this question might arise, I don't know if this can be seen on the camera.
We can see it.
This is a $10 trillion note from 2008 printed by the Central Bank of Zimbabwe. And what you might see here in the lower left-hand corner, a friend gave it to me. It cost $8.95. Okay? So this is what can happen in inflation. Now, again, I don't see this happening to this degree in the U.S., but I am fearful that we will see the erosion of nest eggs and of purchasing power, okay? Bitcoin is a protection from the ultimate erosion we're going to have to see. Something that is unsustainable has a tendency to stop. I think it was economist Herb Stein who once said that. Our spending is unsustainable. One day it will stop, and central banks, again, are going to monetize this debt. Bitcoin prevents these nest eggs from being eroded. So that would be point number one. Point number two is, at such a time as we see this type of devaluation, these type of interruptions in our economy, Bitcoin is going to be just allowing an explosion, I believe, of economic efficiency within our system. And another aspect of Bitcoin that I'm very excited about is, this cross-border transfer of wealth. I'm speaking to you from Dallas, Texas. I'm a fifth-generation Texan. I've spent a lot of time south of the border in Mexico, particularly in my youth. I was in Mexico it probably happened many times in their history, where they nationalized the banks. I literally saw armed Army personnel in banks preventing the populace from accessing their wealth. Okay, that's not going to happen with Bitcoin. As a libertarian, a conservative, I never forget whose money it is. Bitcoin allows it to be really your money. It strengthens your private property rights and your wealth. It protects it from the state, and it protects it from erosion, from bad state policies, and it enables greater economic growth, not to mention greater privacy. And it's one of the reasons why it's so important that the U.S. be the leader in blockchain and cryptocurrency. And I think we both share. We think the Bitcoin is the winner when it comes to cryptocurrency. But it's important for us to be the leader to ensure also that privacy is respected as well. So for all those reasons, I think that Bitcoin is the answer to a lot of challenges that are going to come with traditional finance in the dollarization of our economy.
Can you talk about stablecoins in general and kind of given your background and knowledge of maybe the U.S. economy and our financial system? Like, how do you see the stablecoins playing out here in the coming years?
Well, relatively speaking to the U.S. population and the size of the U.S. economy, Bitcoin is still relatively small. Now it's growing by leaps and bounds. I think that this stablecoin legislation, number one, helps mainstream Bitcoin even more. And so you've lived through, and you were a visionary here, Anthony, but you've lived through the cycle of kind of, what is this thing? This is such a speculative asset. This is, what was it, 16th century tulips in Holland that everybody gambled on and lost their shirts, to where now people are starting to say, okay, what is this? Number one, stable coin, the Genius Act, to some extent, put the imprimatur of the federal government saying, okay, this is an acceptable financial instrument. We have looked at it. And to the extent you believe we are in charge of consumer protection, we're allowing this to move forward. Okay, depending upon your risk adversity, all of a sudden, you're starting to say, okay, this is a less risky asset than I thought. So I think that's a very important point. And once you have government, to some extent, putting their imprimatur on stable coins as an acceptable financial instrument, they get more accepted, as you well know, by mainstream Wall Street firms. Soon to be Y'all Street, but that's a different subject. And once that happens, the people already have pre-existing relationships with JP Morgan and BlackRock and Blackstone. You start to mainstream the idea, and as it becomes mainstream, it grows even further. Then, as a matter, I would say, of U.S. policy, we are seeing, other nations try to de-dollarize their economy. I don't view myself as either a globalist or an isolationist, but I do believe it is important today that the dollar is the reserve currency of the world. It allows us to do things that we otherwise would not be able to do, okay? To establish a stable coin that is tied to the dollar helps keep the dollar as the world's reserve currency. And as people get comfortable with stable coins and are even more comfortable, and as the Bitcoin movement kind of grows, that's going to allow to build other digital financial assets. And I can't think of any financial instrument that ultimately can't be digitized. And so again, this is, the most important step of a long journey is the first step. So this is the first step, and I just think it's going to be an incredible journey, and it all really starts with the Genius Act, stablecoins, and Bitcoin.
But how do you think about the politicians and legislative process thinking about, it's one thing to create rules for the private sector to do stuff. It's another thing when you start thinking about, hey, we as a political leadership body, should we be doing stuff with taxpayers' money, citizens, et cetera, and you kind of have this unique thing of like, you're a libertarian, which I'm assuming you're an advocate for small government, but at the same time, there is this argument of like, maybe it is good for citizens to have some of their taxpayer dollars stored in the thing that can't be debased away by the exploding national debt. And so how do you kind of think through maybe some of the nuances there and how you would advise other politicians to think about it?
Well, I'm leery of the federal government. I'm skeptical of the federal government. I used to be in the middle of it, and I saw it firsthand. And so I think a healthy skepticism should be encouraged, number one. Certainly to have, for example, a central bank digital currency. From an efficiency standpoint, it would be great. It would be fabulous. But the privacy concerns are real. They are very, very real. And so wherever, again, you see government ownership, wherever you see government subsidy, there ought to be some concern of what policies are going to flow from that. So, number one, as an aside, when President Trump announced, we're going to have this Bitcoin reserve and kind of a sovereign wealth fund. And I thought to myself, well, don't you have to have wealth before you have sovereign wealth? Last I looked, we're about $30 trillion in debt. We'll put that aside for the moment. I would say to some extent, when we're looking at the national balance sheet, it is fundamentally different from personal balance sheets. Particularly, and I'm another project I'm involved in is kind of the democratization, for example, of retirement security plans like 401ks. And I believe people ought to be able to have Bitcoin in their 401ks. Again, whose money is it? And I'm not a financial planner. I'm not offering this advice. But in my own case, I want stocks, I want bonds, and I want Bitcoin. And as time goes by and the debt gets worse, I'm pretty sure I'm going to want even more Bitcoin in my personal portfolio. But I have a very healthy skepticism of the U.S. Treasury and the central banks getting involved. I think potentially this could be a bad precedent, and to some extent, with the passage again of the stablecoin legislation, hopefully the passage of the Clarity Act, there's other ways that crypto writ large can be legitimized. And I think, bottom line is sovereign governments are never going to give up their opportunity to control the money supply. But what's important is not that they're going to give up their ability to control currency, but that we have alternative currencies and alternative private currencies, which at other times in our nation's history we've had. And what we'll end up seeing is some form of what Gresham's law, which the economists listening to the podcast know, and that is ultimately bad money drives good money out of circulation, which means there are going to be even more private Bitcoin available because as the dollar continues to degrade, it's going to drive out Bitcoin even more. So the bottom line is it's a long way of saying I'm still a little skeptical and a little fearful.
You used the apparatus and the position that you were in to lead pushback from the bank bailouts. And so can you start just by telling us kind of that story? And why were you one of the few people who saw that there was a potential issue with the banks doing this?
Anthony, back in 2008, I was chairman of something called the Republican Study Committee, which was the conservative caucus in Congress. Today, there's two. Back then, there was one. It's kind of an amalgamation of social conservatives, what we call defense hogs, and libertarians. I'd put myself in the libertarian camp. And so what I saw at the time, and I'm a firm believer that precedents matter and that once you let genies out of their bottle, they're very, very difficult to put back in their bottle. To me, my reading of history, my reading of economics is that the great flourishment of mankind is associated with the maximization of liberty, and liberty applied to economics is essentially free market capitalism. You cannot have free market capitalism if you have, basically, privatize your profits and socialize your losses. Capitalism on the way up, socialism on the way down. And if you lose your ability to fail, you will lose your ability to succeed in America. So indeed, I helped lead the efforts against the original bailout legislation. In fact, the New York Times said that I was co-leading. I usually don't believe what the New York Times says. In this case, I believe the New York Times because I was there. So I tried to lead the effort. And Anthony, every single day when you're a member of Congress, somebody runs down the aisle and says, we have an emergency, we have an emergency. in this particular case, I did believe that we did have an emergency. We did have a crisis. So myself and other conservatives presented an alternative plan, which was much more in the nature of kind of an FDI insurance program, kind of a bail-in instead of bail-out. Unfortunately, in my mind, that plan did not carry the day. And I'm afraid what we have seen now is a more brittle financial system. And we've seen the larger financial players, the big banks got bigger, and the smaller financial institutions became smaller. And I think we've seen less innovation, and we've seen more government control. I mean, government doesn't offer assistance without more government control. And I think, again, these are bad precedents. I think we've seen bad things happen because of it. And I think it's exactly why Satoshi did what he or she did, seeing the same problems that could occur because you had the people who supposedly knew it all in Washington, and supposedly the people who knew it all on Wall Street didn't know it. And all of a sudden, people didn't have access to their capital. They were seeing that capital erode. And so for all those problems, I put my little 5'7" frame in front of that big train. And unfortunately, it didn't quite get stopped.
17, 18 years later, it feels like central banks have perfected this. And we saw during kind of the COVID crash, and we also saw during kind of some of the other events that have occurred over the last 2 decades or so. Every time we get to some sort of weakness in the market or some sort of concern, we immediately, both domestically and now internationally even, go to cut rates, print money, and that seems to be the accepted, kind of criteria in response. Is that how you see this playing out?
That's exactly how I see it playing out. And, I would say at least one of the upsides to the terrible inflation we had a few years ago, I think more Americans are starting to connect the dots between the power of the Federal Reserve, an unsustainable national debt, and inflation. Since time immemorial, central banks have monetized the debt. It's kind of what central banks do. I see very few societies that have successful fiscal consolidation plans when they reach incredible levels of debt to GDP. So I'm hoping more Americans in the body politic have learned that lesson. But indeed, this is a very different central bank than we saw a number of years ago, using very unconventional monetary policy. And some of the dangerous precedents are, I believe, is that you now see really, again, the connection between fiscal dominance, fiscal policy dominance, and how central banks are there to essentially finance that fiscal dominance. And for example, Jay Powell was the biggest cheerleader for fiscal stimulus during the COVID crisis, which I think is unique because in some respects it was the government, the state, that put the economy into an induced coma. That's very different than people taking outside risk back in the great financial crisis and having policies of helping put people into houses that they could not afford to keep. Is a very, very different animal. But the bottom line is those tools, as you put it, being perfected, and they didn't go back in the toolbox. They broke the glass. They pulled out the axe and the fire extinguisher, and once the fire was gone, they're still using the axe and the fire extinguisher. And so that's what I mean about these precedents. And so, for example, having the central bank prop up one distinct sector of the economy, the housing, by buying all this MBS, these mortgage-backed securities, and then during the COVID crisis, backstopping practically every single financial sector in financial instrument, from money market funds to munis. Once they do that, then all of a sudden members of Congress are saying, why should I engage in the appropriations process and go through this, debate and having to be accountable to the electorate? I can just go and use the central bank's balance sheet to achieve my political goals. So it really opens up, again, a number of bad precedents, and to have the central bank now inflate its balance sheet and have such a huge footprint into the economy. The state, via the central bank, is just playing a much larger role in the economy, and that cannot be good ultimately for economic growth and long-term development of our populace.
Can you talk a little bit maybe as to your view as why you're so focused on that intersection of technology and finance, and kind of how you think the opportunity set to improve here is, and one that obviously we hope to benefit as you continue working on?
Well, again, the flourishing of human society is tied to innovation. Innovation is tied to public policy. And listen, please, now I am so excited to be part of the ProCap team, because I see an alignment of my personal business interest with my public policy interest. And when the two can align, I think, my Lord, don't I live in a great country? What a blessed individual I am. And so what I try to do, and the value I try to add, as you know, is not just be able to keep my finger on the pulse of where is the public policy debate, where is the legislative regulatory tip of the sword today, and to help people participate in that process, and to make them most effective, but also to look over the horizon and see what are the public policy trends that people should know about that are going to impact their particular industry or their particular balance sheets or their own particular families. And so what I see is that, again, we are looking at the dawn of a new age. I want to be part of what Joseph Schumpeter, the famous economist, called creative destruction. And to be a part of that is very exciting to me, to further the principles of the democratization of finance, to be part of DeFi, to be part of disintermediation. Again, it's all personally exciting to me. And if I can play a small role in helping to continue to shape kind of the public policy debate, is something I'm very, very excited about. And I think that as we get into this brave new world of digitized assets in blockchain, the question is, who's going to lead this? Is it going to be the traditional financial institutions who know a lot about banking and finance, but know very, very little about blockchain? Or is it going to be those who know a lot about blockchain, a lot about crypto, but very little about global finance? My guess is it's going to be the firms and the individuals to where that intersection occurs.